With the developments under Oracle. By the way, it wasn't just Oracle under pressure today. Shares of Broadcom, which have been up nearly 4% after posted earnings last night, ended the day down more than 11%. Several analysts saying they expect the chipmaker to take a margin hit from costly AI build-out. So here we have two major pieces of the AI trade not giving us a good bullish narrative going into 2026. What do you make of this?
Yeah, I mean, this really feels like, I like to say AI fatigue. The AI spend fatigue is out there. And Meta really is the barometer for this. When years ago, remember when they were spending a ton on the metaverse? Then they stopped spending a ton, and the stock ran. So now they spent a ton on AI, and now they're not spending a ton, and they're throttling back. I think the market is saying, "Show me something for the money," right? So when you look at AVGL, when you look at Broadcom, I hate the symbol. Like
I think it's BRCM in my head.
It's all the time. So when you look at the custom chips, and those are lower margins, this is what they do. So they do have the kicker with the VMware of software. So that's why I like the stock. I would actually be a buyer on this type of weakness. But when you look at the other ones, they don't have a kicker. And I think that fatigue is real.
I mean, for the Oracle story in particular, because this has to do with OpenAI data centers specifically, and there are questions also about OpenAI and how it gets its money. Then you have what Seema had mentioned, which is how the bonds are trading for Oracle, which are now trading at a higher for the September issued bonds, the $18 billion of bonds. The premium has widened. So investors are demanding to be paid more in order to lend Oracle this money. So that's gone up. CDS, the cost of insurance on the bonds, that's gone up. There is a question about every piece of the financing puzzle in the case of the Oracle OpenAI.
Yes, and I'm glad you made that distinction because I agree. So I'm with Steve in terms of I do think that there is this spending fatigue. It's essentially, investors are essentially saying, listen, we need to see where the revenue or profitability is going for there so that we can kind of like bootstrap and infer what is going to be the actually upswing from the spin. But again, I do think these are two distinct stories. I think in Oracle's case, they really haven't been able to button down exactly what the debt raise is going to need to be, and essentially how long and how much they're going to be willing to spend. Now, whether or not margins start to compress, I mean, we already know that they're kind of in a lower margin business. That is part of their value proposition, that they're able to provide servers and technology and software in this entire bundle for a lower price point. So I think the concerns there are real. I think OpenAI kind of opened the door for this whole concern when they mentioned the whole Fed backstop, but at the same time, I will say that you are seeing some positive things. You saw the Disney deal. So again, I don't really get. I'm always concerned as an investor, right? Clearly, you always need to be a little bit skeptical. You should be a little bit paranoid. But at the same time, I'm not ringing the alarm bells. On the Broadcom side, the truth of the matter is that you are eventually going to talk about, and we all talk about when will NVIDIA's day in the sun eventually come to an end. It will eventually come to an end, and that will likely happen when there's more money being spent on inference than learning, than training. And so I think the concern there is that like all of their current customers, the hyperscalers, are eventually going to get their own custom chips. Well, when they do that, Broadcom is going to be the beneficiary. So for me, I think it's actually a way for you to broaden your exposure away from NVIDIA. I just think right now, to Steve's point, the fatigue has set in, and you're seeing Broadcom pulled down with that. They did have slightly weaker non-AI and software numbers, but the truth of the matter is that I think these are very distinct stories and should not be lumped in together.
Yeah, I do agree with that thought process that some of these are company specific. So I think when you look at Broadcom, I mean, that was trading near 40 times forward earnings. So it's pretty much priced to perfection. And I think that's one of the biggest problems here is if they're not going to meet a very high bar, you're going to see some profit taking there. But I don't think they have as many structural issues as you're necessarily seeing with Oracle. Like that's where people are really starting to question, can they actually really perform based on the amount of debt that has to come into this company. So I think when you look at those credit default swaps 5 years out, and you kind of hit the nail on the head with this, that's up 50% in just the last month. So just in the last couple of weeks, I mean, people are demanding so much more on insurance on that company because they're not sure if they are going to actually be able to pay out on that. And especially because OpenAI is a majority of their remaining performance obligations, that is a company that's not going to be profitable for several years in the future. So I think that's a bigger concern to me than what you're seeing in Broadcom.